Good evening and a very warm welcome to all the participants who have joined us today for the webinar on demystifying investment banking. We are privileged to have a very special and distinguished guest today with us. It's a pleasure to introduce you all to Dr. Miran Dalvi. Dr. Miran V. Dalvi is a renowned academic and industry leader who has made significant contributions both in academia and in the financial sector. Currently, he serves as the CEO of the Association of Investment Bankers of India, where he plays a crucial role in the representation of IB in high level discussion with government officials, regulators, and with international organizations. His efforts have been instrumental in promoting collaboration with stakeholders and advancing key advocacy goals. Under his leadership, IB Connect has organized a variety of conferences, training programs, and workshops aimed at benefiting the investment banking community. Before his tenure at IB, Dr. Dalvi was the dean at Times Pro, a division of Times of India Group, where he was pivotal in launching programs in partnership with national and international universities, including Monash University in Australia. His tenure at Times Pro earned him 5 awards over 6.5 years of his tenure, and he was a key player in driving business growth and strategic initiatives. Dr. Dalvi has also served as a Dean of Programs at the Bombay Stock Exchange Institute Limited, overseeing programs such as MSc and MBA in Finance. His academic expertise spans various complex finance topics, including financial derivatives, corporate finance, security analysis and portfolio management, financial statement analysis. He has been a faculty member at various national and international universities and has conducted corporate training for prominent organizations like BSc Mumbai, NSC Mumbai, Kotak Mahindra Bank, and Midcom Consultancies. In addition, Dr. Dalvi served on the board of several education institutions, including Kohinoor Technical Institute, Guru Nanak Institute of Management Studies, Kaziranga University, Priya College, and MGR University. He has developed content for prestigious international publication and has presented more than 10 research papers in various national and international journals. Dr. Dalvi holds a PhD in finance with a focus on mutual fund, an MBA in marketing, and an MCOM in accounting and taxation. Sir, it's truly an honor to have you here with us today, and we look forward to your insights and expertise. So I request you now to lead the way from here.
Thank you, madam. I'm overwhelmed, actually. Uh, you want me to start?
Sure, sir. Many of our participants have already joined in.
Okay. Hi, good evening, all of you. I know, you've been on mute, but can we chat? Wonderful. I can see a lot of good evening. So, let me understand, before I start on this masterclass, what actually do you expect from this webinar? Or why are you there in such a large number? I can see the participants growing. Can you quickly type out in the chat box and let me understand? See, it has to be a dialogue rather than a monologue. Otherwise, probably I go on and on and on. Uh, and so quickly, could you help me understand what are you looking for, or why are you there in this web masterclass today? I know NISM has done a wonderful job. In fact, they've been working fabulously, uh, doing all such webinars on different areas of capital markets. And thank you, madam, in fact, for inviting me here. It's always a privilege to get associated. But yes, can I quickly have some good evening is done. Oh, great. Know about the industry. We want guidance. Know about the industry. Learn about investment banking. Uh, Enhance my knowledge of investment banking. Career in investment banking. Great. Somebody is saying career. How to start career in investment banking after graduation? You are a C. Somebody is a CA. Somebody is a fresher. Of course, I cannot take all your names. I know you'll have been wonderful. Career in equity fund, working in private equity industry, but we talk about investment banking side of, so I'm clueless. Okay. Wonderful. So great having you all of you here, and we'll try and make the most of out of this 1 hour that has been assigned to all of us. Uh, Probably there could be a lot of questions, but some important ones I could take towards the end of the session, if that is okay for you. Right? Should we start? Any idea what is now? When we say bank, there is something that typically comes to your mind. Uh, what do you feel? What is the difference between an investment bank and a corporate bank or a commercial bank, let's say? Because commercial banks you all have been visiting regularly all over the years. You've been transacting uh, into commercial banks. Investment bank, probably you all have heard. A corporate commercial bank gives out loans usually. Okay, great. And what else? And what does an investment bank do? Okay, they give out loans. Fair enough. They manage personal portfolio. Okay. Mm, investment and personal portfolio, managing personal portfolio. Investment bank do not cater to regular public. Oh, great. Somebody is coming closer to the topic. Mehta Baziz. Great. I really appreciate. Okay, let's look at it. So we'll start from the basic. We'll try keeping it basic, probably move towards something that is more advanced. So as I mentioned, commercial banking is often it often deals with deposit taking and giving loans, and its major activity is to ensure that they accept deposits from the public, and then these deposits are channelized to the borrowers, right? And in return, in the process, they make margins, they make money. So basically, their job is accepting deposits, lending money, issuing checks, cash management, treasury management, and the kind of corporates, the kind of clients that they have retail clients like you and me who have got our savings account. If you've got a business, you may have a current account or you may have opened a fixed deposit account. So these are different clients, even corporate. Now, for instance, there are a lot of companies that are there out there in the market. They have their accounts with these banks. Investment banking, though that word banking is there, but investment banking deals with a bit of complex. As somebody said that it does not deal with regular public. That is B2C kind of operation you may not find into investment banking. So they deal more majorly with listing. Now, listing is nothing but official entry of the company into the stock exchange, right? Now, so all that happens before the company gets listed, or the time the company wants to get listed, the company decides that it wants to get listed on the stock exchange. What they do is they approach an investment banker or they approach a merchant banker, as we call in India, and then the entire process starts. So there is a long process that is undertaken by these merchant bankers. So advisory is there. There are mergers and acquisitions that are done. There are corporate restructuring, trading, asset management. So, cater to IPOs, FPOs. FPO stands for follow-on public offers, or private placement, or restructuring, or asset management. Now, the clients, obviously, you can understand who are the clients here. Clients will be the corporates, large size corporates, high net worth individuals, small and medium organizations. So, all these are the kind of uh, clients that the investment banking deals with. So far, so good. So, as I said, it is one of the most fascinating areas. Whenever company decides to go public, whenever the company wants uh, to get listed in the market, they want to raise additional capital. Uh, Obviously, they need services of an investment banker or they need a services of merchant bank. Now, what do they do broadly? Let's see broadly what are the kind of activities that they do. May not be all the activities. So, if you look at different countries, the kind of activities will differ, uh, and they probably are called by different name. As I said, in India we call merchant bankers. In US, if you go, you'll find the particular term used is investment bankers. So, issuing equity. What happens when you issue equity? Quickly in the chat box. What happens when you issue equity? Yes, IPO. Okay, dilute shareholding. Very good. Santosh is saying dilute shareholding, raising capital from the shareholders. You go public, ownership gets transferred. Yes, you go to public, invest in company, raising. And why do you feel? Why does public invest money into this IPOs? Or why does somebody want to get ownership? Let's say you invest your money into Reliance Industries now. Reliance is already listed long time back. But let's say, okay, to get profit, capital appreciation, profit, growth and investment, uh, what else? Wealth creation, wonderful, higher returns. But do you realize that when you buy share of these companies, whatever number of shares, you also become part owner of the company? Are you aware? You become part owner of the company. A dividend capital appreciation ownership, that is fine, but you also get part ownership into the company, right? So that's one of the major chunks there in the market. And today, if you see, I'll show you some data also that shows what are the career prospects, because somebody was asking me what are the career prospects that you got if you want to enter into investment banking, or what are the reasons that this investment banking will grow. So issuing debt, of course, companies issue debt. Debt also gets listed in the market. Mergers and acquisitions, you might see a lot of mergers and acquisitions happening these days. Uh, so, for instance, some of the old examples and popular ones, Tata Steel acquired Chorus or Tata Motors acquired Land Rover Jaguar. So, those were acquisition deals. A lot of these companies merged. Uh, you know what happens when the companies merge? Let's say A and B Limited are merging. How Vodafone Idea is. What happens when a company merges? So let's say A Limited is there and B Limited is there. Oh, Hero Honda broke now. It's long time they've separated now. That was a kind of joint venture that they had. Yes, capital increases. That becomes a single entity. So typically, in layman language, A Limited and B Limited is there. So it could make a new company, probably C Limited, or there could be only one entity that remains, that is A Limited, right? Yes, we will see the reasons, of course. Restructuring is there. A lot of companies face different type of problems. So there are restructurings that are done. Trading, of course, in India, you have a separate licenses for trading, brokerages, and asset management. So these licenses are separate, but in couple of countries, you'll find all these businesses put together. Right. Now, one of the fascinating question is, why do companies list? Why do they want to go public? Why do they want to dilute ownership? So there are multiple reasons. These reasons could be in combination, or they could be uh, all reasons put together, or there could be some reasons put together. Of course, one of the prominent reason is you planning to grow, you want money to grow, and where will that money come from? So listing gives you that great opportunity. You are buying, you have a sense of ownership. So when you buy companies, as I said, obviously, when you buy shares into the company, you have sense of ownership into the company. Reputation for the company, visibility for the company. Listed companies have higher visibility. Uh, Tool for management compensation. So there are founders also. You've been running the business for quite some time now, and there are a couple of founders who are looking for an exit. So this could be an exit opportunity. So they sell their stake into the company, right? Uh, who invest in these money? Now, of course, people like you and me invest. What are people like you and me call us? Any idea? Retail investors, of course. You and me are retail investors. Who else do you know invest in the market, in the IPOs of the companies? Oh, uh, somebody is using individual investors, retail investors, HNI, of course, corporate, yes, shareholders, hedge fund, institutional investors. What are institutional investors? Who are institutional investors, by the way? FIIs and DIIs, great. Foreign investors are there. Mutual funds, yes. Foreign institutional investors and domestic institutional investors are there. Uh, Mutual funds, yes. In mutual funds are there. Insurance companies are there. They invest these monies into the IPOs of the company. Then there are hedge funds. What are hedge funds typically? Any idea? Madam, I must really appreciate your audience. Mega companies. Okay. What are hedge funds? Those who hedge risk. Okay. Short-term profit making, provide safety, big risk. Uh, yes. So typically these are kind of funds. They collect money from investors. They're typically registered in India, and these are professional investors similar to that of mutual fund, but mutual funds are registered differently. These people are registered differently, and they invest your money into different companies and create a portfolio, right? And of course, yes, they balance the risk, they manage the risk. So there are a lot of hedge funds that are there, institutional investors. We've already seen. Now, when the company goes into when the company decides to go for an IPO, obviously there are multiple things which the company would look at. First is the subscription. Now, who are the people who would subscribe for these IPOs? So as we've seen, there are different uh, categories of people who would subscribe for these IPOs. Why should somebody subscribe to these IPOs? Of course, because they feel that the company's got good growth prospect. There is a strong leadership team that is there sitting out, and they know that the company will be well managed. It will grow over a period of time. So you see, so a lot of these examples. You see, Reliance started in a small way. Today, you see where Reliance is, or you see Infosys when it was started, uh, or one of the fantastic example where you buy your regular stuff. Amazon, are you aware? What did Amazon start as? Amazon also started in a very, very small way. Yes, wonderful. Bookstore. Yes. And today you see where Amazon stands as. Similar way, one another wonderful name that comes to my mind is Samsung. You know what this Samsung start as? Any idea? Cooker, no. Uh, me- Not this time. Noodles company, somebody got it right. Fisheries, yes. Not computers. Appliances, no. Chip producers, no. It started as fisheries. So you maybe on YouTube, you can get all these wonderful stories. How did the company start, and today, what they've been, and what are the kind of phases that they've gone through. Similar wonderful story is of Panasonic. I'll not narrate the story here, but maybe on YouTube you can find out the story of Panasonic as well. So it's a similar kind of story that you find. So of course, when you there are success stories of how what are the kind of efforts that investor had put in, what are the kind of hardships that they've gone through, from where have they come in, and how they build the company, and what are the kind of products that are there, how are these products catering to different target segments, what are the kind of target segments, will they have demand in future, uh, and there are multiple stories that are there in the market, why people uh, you know demand these shares in an IPO. Strong leadership, of course, is very critical. It's one of the most important factor, remember, when you go out in the market. All those companies with strong leadership teams are the companies that you will find have prospered, and this is worldwide what you see. Growth potential, of course, unless the company has got growth potentials, you may not buy into those companies. Positive cash flows, yes. uh, Valuation, that is decent pricing and solid market position. All There are multiple other factors that could be the reasons why people subscribe to IPOs. Okay, one of this is one of the very critical factors. Company valuation. Uh, how does company know what is the right price, or how is the valuation done? Do you have any bit of idea? Let's see first one that is written, DCF valuation. What does DCF stand for? P ratio, no. DCF, discounted cash flow. Yes, it's discounted cash flow. What is discounted cash flow? The word tells you discounted cash flows. Discounted cash flow is correct, but yes, it is basically present value of all future cash flows. It is present value of all future cash flows. So let's say you predict what are the kind of cash flows that the company will have, what will be the growth in the cash flows that the company will have, and then you discount them at the weighted average cost of capital. Of course, I'll not go into the technicals of these things. Weighted average cost of capital takes into account your cost of equity and cost of debt. So, just to put in layman's language, cost of equity is nothing but uh, it is the expected return by equity holders from the company. Okay. In short, it is expected returns from the company when you invest in shares. And cost of debt is nothing but the rate at which the company is borrowing, right? So there is DCF valuation that is done. This is, of course, one of the ways of valuation. This is not the only way of valuation. Then companies, when they want to go public, they do a lot of road shows. And what is the objective of this road shows? Any idea? Why are these road shows done? Somebody's written formula as well. Wonderful. I don't want formulas. I told you then they probably will have to talk only on DCF valuation. To showcase the firm, yes. To create an awareness, promotion, of course. And why do you do this promotion? What is the objective? You do road shows, and okay, promotion is okay, but any which ways you can otherwise also promote. What is another objective? Brand awareness. Okay, brand value increases, brand loyalty increases, marketing. Subscribe, yes, subscribe the shares, invitations, customer loyalty. I doubt. How can you judge customer loyalty to it? Understand, yes, before the company does an IPO, these roadshows are done to ascertain the price. So there is something called as a price band. Are you aware? Are you aware what is a price band? Normally, the price band is, let's say, 300 to 320, 15 rupees is the price band. Now, when you have to invest into these price bands. So, one of the important functions is ascertaining the price band. Trading comparables, yes, somebody was talking about it. So there are trading comparables that are, of course, P valuation or P multiples or profit valuations. Economic environment, of course, now you see a lot of IPOs coming out in the market every week. So there is a big IPO calendar if you visit any of these websites, NSE or BSE India, or even SEBI's website, you'll see a lot of them who have filed their DRHP. DRHP stands for Draft Red Herring Prospectus. So these are the companies that intend to bring out their IPOs in the market. So when growth perspectives are good, when environment is good, obviously India, you find that conducive environment for growth. And that is the reason you find a lot of these companies that are uh, coming out to the market to grab the share, right? So this is a brief on what is valuation. Now let's see what is the process. I'll put in what is the IPO process. So typically, if you have a company and you decide to go public or you want to raise money from the market, you usually start. Uh, you hire a merchant banker, obviously. RTA is a registrar and transfer agent, legal counsel to vet all your documents. So there are multiple appointments that have to be made. So issues typically could be a main board IPO or it could be an SME IPO. Do you know what is main board IPO? Main board IPO. So typically large companies that come out, NSE and BSE, both are NSE listed at NSE and BSE. These are typically large companies that borrow a good amount of sum from the market, maybe 500 crore, 1000 crore, 5,000 crore, 10,000 crore. So these are typically large companies, and SME are small and medium enterprises. These are companies that come to the market to get listed. Of course, both NSE and BSE, they have created a separate platform for listing for both of them. So mainboard IPOs and SME IPOs get listed on a different platform. There is a separate SME platform created. I think NSE, it is called as NSE Emerge, and BSE also, they've got a separate platform. Define key issues that are there. Uh, then there could be valuation methodologies used. Now, valuation could be multiple valuations that are done, multiple way the valuations are done by the company. This is one of the very, very important functions, uh, of course, performed while the company decides to go public. Drafting up prospectus, DRHP, draft red hearing prospectus. Any idea, just a vague thought on what is draft red hearing prospectus? Draft red herring prospectus, or it is like a prospectus. Why it is called draft red herring prospectus? Is it because it is red in color? No, it is not. It is a temporary prospectus. Okay. First prospectus approved by SEBI. Okay. Book building. Okay. In this DRHP or draft red herring prospectus, prices are not mentioned. So price band is not given. Like we get in colleges, it constitutes all of the red and green flags of the company. Uh, you get in college all the red and green flags. I'm surprised to know that. Prospectus submitted. Yes, these have to be filed with SEBI, of course. Uh, but why red herring prospectus? So this is probably an old story where uh, this name has come because of the kind of fish that was red in color, uh, and from there onwards, it is nothing to do with the red color, not because the prospectus is red in color. Legal procedure, of course, the lawyers play a big role into drafting of these prospectus, vetting the legal standings. Road shows are done, and the price band determination is done. So marketing and price range is decided. As I said, there are fixed price issues, or there are price bands that are there. Once this is done, uh, once it is filed, now of course, while seeing here, this process looks very, very simple, but it is not that simple. So when you file your uh, prospectus, red herring prospectus with SEBI, in case there are any observations, SEBI gives out those observations. You have to work on those observations, file an updated uh, red herring prospectus. Uh, Once this is done, then there is a listing date that is decided. Before that, allocations are done by the registrar and transfer agent. And typically, if you see the allotment nowadays, you have something called as ASBA. Have you heard ASBA? ASBA? Since a lot of these people are new, I see a lot of college students here. Uh, ASBA, have you heard? No. Huh. Not asset-backed securities. No, I'm not talking of securitization here. No, no, no. Yes, application supported by blocked amount is the full form. If you all are noting it down, please note it down. Application supported by blocked amount is the full form of ASBA. Now, what happens? ASBA typically, I don't know what your syllabus teaches you, because there are a lot of students, I guess, here. Typically, you must have seen first call, second call, final call, core feature of shares. Earlier, that was the phase where, company invited money from the public, and then call was, uh, and if you made application money, and if the shares were not allotted to you, this application money had to be refunded to you. Uh, Now, through this ASBA mechanism, what is done is money doesn't go out of your bank account. In fact, money gets blocked into your account. So you've got a saving account. You apply through IPO through this ASBA, which means your money gets blocked into this account. If shares are allotted to you, the money gets debited from your account. It will go to company's account, obviously. And if the shares are not allotted to you, this blocked amount gets unblocked. So till the time this amount which is blocked in your account, you continue to get interest on that amount. And that is why it is called as ASBA, application supported by blocked amount. Get it? So maybe you can learn more once you go back, or if you've been applying, if you've been applying for IPOs, obviously you might have applied through ASBA. Then, other than that, there is something called a season equity offering, or follow-on public offer. This is, of course, similar. Whenever an existing company wants to issue the shares, additional shares to the public, and they come out with season equity offering or FPO. This process is almost similar to an IPO, but since you all are already a listed company, you've already come out with an IPO, the process of SEO comparatively becomes similar, or FPO becomes comparatively similar. Documentations, filings you've already done during IPO, you have to update them. Valuation becomes much easier because your shares are already trading into the market. So you know what is the value of shares. And many investors, they know the company. So if there are known companies that are coming out with an FPO or SEO, obviously it becomes very, very easy because people know what is the trading price. They know how is the company. They get to see the financials of the company. They evaluate the company's performance. So this comparatively becomes much, much easy. Now, why do you come out obviously with an FPO or an SEO? To finance the company, you want to raise additional capital. There is a liquidity that is generated. You plan your growth and expansion. You fund your growth and expansion plans through it. So multiple reasons. Then there is something called as private placements. Private placements are also comparatively easy because lot of registration process that is done during an IPO or an FPO is not done here because you do not sell your securities to a larger audience, which is public. This involves selling off your securities to a smaller number of, to a smaller group, either individuals or institutions. So you do not come out with an IPO. Instead, you do private placement of securities. So lesser regulatory filings, obviously, comparatively lesser hassles than an IPO. You raise capital through this means also. Uh, and so it all depends on the kind of companies or companies approach, whether they want to do an IPO or whether they want to do a private placement. One of the other things we discussed was uh, mergers and acquisitions. Now, there are multiple reasons why a company does a merger and acquisition. Of course, some of the reasons are listed here. But very, very important, when a company gets merged, if you want to buy another company, what is something that you would look into? Shark Tank, okay. Shark Tank, you must have seen. Yes, that's more of a private equity. Goodwill of the company, okay. Reputation. What else? Synergies, very good. Somebody said synergies. Synergies, yes. Goodwill, valuation, intrinsic value of the company, valuation, business assets of the company, expansion, strong capital, growth prospects. So why will you buy out another company, or why do you want to uh, merge with another company? Growth prospects, yes, there are multiple ways. So economies of scale, expansion, diversification, your market share increases. There are different type of mergers that could happen. Vertical merger, horizontal merger that are there, or conglomerate mergers are there. So there could be backward integration where you buy out a company that is engaged into manufacture of raw materials so that the it becomes smooth for you. Or maybe you acquire a company into a different segment because you want to enter into that business, want the growth and expansion to happen. You might have seen, Reliance or Tata groups, they are well diversified. They are into multiple lines of business. Cost saving is there, of course, synergies are there. There are new companies where you want to access new technology. You want to strengthen your brand. You want to reduce competition that is there in the market. You want easy access to licensing or distribution. So there could be hundreds of reasons why do you want to go why do you want to acquire another company. Very, very critical is you have to look at the kind of synergies because there are a lot of mergers that fail also in the market. Remember this. A lot of mergers that have happened and then they failed. One classic example I can quote here is have you heard the company name Suzlon? Suzlon? Yes. Suzlon acquired RE Power or a company called as Senvion. That was roughly for $1 billion. Uh, and if you see Suzlon, maybe this I'm talking about 2004-5. This was one of the very favorite stocks of the investors. So a lot of analysts recommended buying Suzlon because that is a company that is engaged in wind power. And after this acquisition was made, company had huge debt piled up on its shoulder. I remember I analyzed Suzlon, and almost 10% of the revenues earned went into payment of its interest. So company was earning, let's say 100 rupees hypothetically. It paid more than 10 rupees into its interest. And this went on piling. Finally, after couple of years, this company was sold for a similar amount, 1 billion euros. Uh, and now the company started picking up again. So you see a lot of acquisitions that happen uh, in the market, and there are multiple reasons. So not all mergers and acquisitions are successful. A lot of M&As fail as well. Now, these are some of the IPOs that are there in the market. Oh, this IPO picture is coming. So this is the actual data that I've put in for your reference. Uh, First column, you see the name of the company. Second column, you see whether it is an SME IPO or a main board IPO. You see when was the company listed, what is the kind of issue that there is, how many times this was subscribed. See, company subscribed 393.87 times, excess times. Issue price was 96 rupees. It listed for 191.50. Today, the market price is 191. So good companies obviously will have good demand, and you see good amount of gains made by the company, even listing gains. See, same. Uh, Green Ganesh Bharat Limited. This was an SME IPO, July 12, 2024. Subscribed to 29.92 times. 190 was the price. It listed for 398. Imagine 109.47 percent was the listing gain. That was on the day of listing. Today the price is 457.80. So it's not that it doesn't mean that all the companies that are shown are in green, and all the companies, all the IPOs that come in the market will prosper. Nothing like this. Please do not draw any kind of inferences. Before you invest your hard-earned money, you have to be very cautious. You have to evaluate how the company is, what is the performance of the company, what is the times it has been subscribed, who are subscribing, who are the people who are subscribing, who are the people behind the company, what is the management of the company, what are the kind of products that the company is into. Uh, you evaluate it and invest your money. So there are a lot of investor awareness programs that are there for investors. SEBI does a lot of investor awareness programs. NISM, I'm sure, does a lot of these kind of webinars and investor awareness programs. National Stock Exchange does it. Bombay Stock Exchange does it. A lot of companies that are there in the market, financial services companies, they do a lot of these webinars, advertisements that are there in the market. Or you find Amphi doing mutual fund sahi hai kind of campaign. So there are a lot of these things that are done in the market to ensure that investors' interest is protected, right? So this is from the data from NSC, recent data that shows, what were the main board and SME uh, listings that have happened. OF is offer for sale, FPO, as I mentioned, rights issue, preferential allotment, QIPs. So this is the data that I've taken from National Stock Exchange. Uh, yes, now probably this is one of the reasons somebody was asking me in the beginning, what is the kind of opportunities that I have. So see, this is only NSE India, by the way. So this does not include data from uh, this does not include data from BSE, but you see the kind of growth that is there in the company. 2000, 2001, there were 785 companies that were listed. And you see 2023-24, what is the kind of how much growth is there in the companies? More than three times, 300% growth is there in almost 24 years. And see this gap. This was, of course, COVID, sorry, 1920, 2021. You see the companies remaining almost stagnant. 2021, 22, slight growth. 22, 23, there is again growth coming in, but see the jump that is there. 2020 to 23 to 23, 24. See the number of IPOs that have come into the market. Now, imagine if all these companies are there in the market, who will manage them? Do you need manpower to manage them? Yes. Where will this manpower come from? Do you feel existing manpower is sufficient? Existing manpower is sufficient? No, it's not. So there is continuously need for people in the market. Of course, there's a lot of demand which is there. Only thing because the right set of mindset. I'll come to that point as well because the right kind of skill sets are not available. You uh, Not a lot of people enter into the segment. We'll look into that as well. Yes, another reason why lot of manpower would be required. Of course, we are the fastest growing economy in the world with 7.6% GDP, on the way to 5 trillion economy, uh, high amount of capex growth, 30% plus capex growth. You see NSE, both Nifty and Sensex are at all-time high. We are seventh largest in terms of market cap today. India has highest number of IPOs. You look at the number of IPOs that are there. See this left-hand side column. We had close to 150 IPOs, and you see China, US, the number is going down. We had total 279 of the IPOs, raising almost close to 75,000 crore rupees. This is IPO proceeds that is there where you see both volumes of IPO proceeds in the global market going down. You see the similar condition in India. You do not see the similar condition in India. In fact, we are growing at a much, much faster pace, right? Now, obviously, if you look below here, the leading 10 stock exchanges in the world by market capitalization. So, of course, first is US, first, second, third is Europe, China, Japan, followed by India. So there is acute dearth of people in the market in multiple sectors. So you see, uh, again, this is another chart depicting what is the kind of money flow that is there into the market that has come over the years. You see this IPOs, but these are not the total IPOs. These are only large IPOs that have come hit the market. And you see the difference between 2023 and 24. From 38, we moved to 82. The kind of IPOs that so from 14 to 24 last 10 years. So see the growth that has come into 2024, right? So we have to reach more than double what has been anticipated. Now, if we double the kind of volumes that are there today, the number of IPOs that are there in the market today, obviously we would need multiple times of the manpower that is required in the market. Now, where will this manpower come from? Obviously, all of you. Now, that gets depicted in the next chart. So this is two cities. We talk high about China. See what is the case. Shanghai Index 2004, where they were 1,500, 2024. They are at 3,000. So growth is how much? 2x. So GDP growth is not equal to corporate profit growth, is not equal to market cap growth. Other side, let's see what is India now. Just a second. Yes. See where Sensex was 2004, we were at 5,000. 2024, we are at 70,000. So compare these. 14x growth is there, whereas that of China is 2x growth. So GDP growth is equal to corporate profit is equal to market cap growth. So you find everything in sync with each other. Another important reason why we've got a big advantage is this. You see the kind of population that we have in the age brackets. You see typically from 20 to about this bracket age 30 to 34, you find 12.3 plus 11, which is 33. Sorry, plus 43, around 50 odd percent of the population is in young group. So we've got a big demographic advantage as far as people is concerned. Now, any questions so far? So far it's going good. Great. All good. All good. All understood. All super. Okay. Thank you. Thank you. Uh, Somebody was asking, yes, this chat depicts the population group that we are into. So this is in crores, of course, number of people in crores. So typically, if you look at this age bracket, 12.3 crore kind of people are there into this 20 to 24 bracket, which is the workforce, which is learning or will come out of the colleges and universities, do their post graduations, MBAs, MScs, engineerings, and they'll come out of the market to join the new workforce. So if you see a lot of young workforce that we have in India. Yes. Now, very important. One thing, of course, I want to tell you apart from these skills, investment banking field is popular because investment bankers are well paid. मतलब you might have heard a lot of these stories. बहुत पैसा मिलता है. They get good amount of money. But my friends, this good amount of money doesn't come that easy. There are a lot of efforts. You need a lot of patience, lot of skill sets to be acquired. Moreover, life is not very easy. मतलब do not think कि मैं 9 बजे ऑफिस जाऊंगा और 5 बजे वापस आ जाऊंगा. That doesn't happen here, right? There is good amount of efforts that you have to put in. Of course, well paid is one aspect of it, but do not see only the payment. See the kind of efforts that you need to put in. See the kind of skill sets that you need to acquire. Uh, Somebody is asking. I'll take up your questions. So strong